Hello everybody to Commodity Click. That's right, CC's Commodity Click now. We're going to look at oil and gold. Some opportunities here. I mean, there's been opportunities presenting itself to oil, and for me it's a bigger trade than just these scalpy ranges. And we're back down to that level again, the $85 zone, $85 a barrel. Look, it's got to be tried. It's rude not to, but I'm basically feeling that if this doesn't bounce from here, we do creep down a little lower. Now I'm just going to get rid of a lot of these indicators because it's really basically just range-based formation sort of trades going on around here. And what we see is we can have a look at this, and we can see that there is some form of support being brewed in a descending fashion. And this would mean if we do break down below 85, there's a chance that around the 82 and beyond over the next week or so would be the area that we get supported from. And I am not very confident, but I'm pretty confident that we either bounce from here up to 100 and beyond throughout the rest of this year, or we come down to here and bounce to 100 beyond the rest of the year, or we come down to 75 and bounce down to towards the end of the year. The destination for oil is back above 100, probably above 104, 105 is my expectation, and then see where we go from there. I am desperate to long this position. I will succeed in longing oil, but yeah, it's been a bit of a testing chart really, and it's the only one that I've really been trying to play, to be honest, out of crypto really, for the most part, just allowing for new ranges to be established and effectively new lows to be established for a long-term buy position across many altcoins really. We're looking at commodities really, the movement out of equities, out of stocks and indexes into energy and maybe precious metals as well. So that is basically the deal when it comes to oil. There's not really much more to it than that. We do have regular and hidden bullish divergence brewing on this portion of this downtrend here. So there is the chance that this is the long. I know I've been saying that from here. This is the long that will take us. No, it won't. This will be the long that takes us. All right, this will be the long. Okay, this will be the long. One of these is going to be the long that takes us up to 100 and above 100, and then this is the nature of trading, I'm afraid. But the good thing about this, and the same with what I'm going to show you with gold, is that if this is something that you do want to do and you are happy with playing with leverage, which again you need to be, risk management is probably the most important thing that you apply to any leverage trade if you wanted to do it. The good thing about these setups I'm going to show you with oil, and what I am showing with oil and the one with gold, is that it won't take much to realize that you're wrong and you get stopped out at a decent place. Again, same with taking the position at the appropriate place, which first of all is about between 86, 85, 86, and secondly would be down at this descending trend line, which is between 83 and 81 over the next few days. So that's pretty simple really, and again the destination for this is going to be above $100, and you know, I'm not suggesting you hold it for any, do what you want with your own trades, but I'm trying to take this trade and ride it up to about $104. That's the plan, and that would be decent. I was talking to people on the Patreon last night about, you know, the people wanting to short. Someone was looking to short the euro, because I've been going on about shorting the euro and how the euro is going down over time to probably, you know, close to, if not 50 cents on the dollar. It sounds dramatic, but that's the direction it wants to go, and with the fundamentals, you marry that with the technicals, there's nothing really to stop it at the moment from doing that, which sounds pretty dramatic, but we're talking over time. We looked at that on a monthly chart, so you can't really apply leverage on a short-term time frame based on a monthly chart. It's kind of hard. But one thing I was saying is that, you know, when you're doing a leverage position, just like you would with a spot position, you don't have to go all in at one place. You have your allocated margin. You can scale in to any position, scale in at 85, scale in at 82, and scale out on the way up, scale out at 96, scale out at 100, scale out at 105. You don't have to go all in and all out at one place, and that is a really decent way to do futures or leverage trading. There's no need to go all in and all out at one place. I don't know, it doesn't seem to occur to people that that is a way to do futures trading, but of course it is. You don't have to, you can shave profit off all the way up if you want to, just like you would do with a spot position. So that's your oil there for you. We'll look at gold, which we're on the 4 hourly. It makes more sense to look at this on a daily, and again we'll take all these indicators off because we don't necessarily need them. We can see here that there is a super support. Again, supports break, as do resistances. There is a super support that's lurking around here at around about 1680, so 1680. And the dream would be that we get to retest that again to take on one of these positions, these long positions. Now, again, you can scale into something like this as we sort of approach it, just in case you're front run, which looks as though it's been front run a little bit today. It's a bit of an anemic sort of move, but it looks like that could be the case. And again, with all the inflation problems like this, gold is supposed to be the hedge against inflation. The thing that's driving, in my opinion, the thing that's driving all prices down, commodities, stocks, crypto, the lot, it's the obvious, which is our friend Dixie, or should we say the enemy of the Dixie. Depends on which side of the fence you're sitting. And for me, I'm on both sides, so I'm friends with everyone really. Friends with the dollar, friends with everyone. And the thing with the dollar is that there is a formation. Again, we can take all these indicators off because we know that this is an uptrend. But if there is an area to think about a major resistance, it would be at the top of this channel. It might not be the overall resistance that brings it crashing back down to extreme new lows. There's lots of reasons, like I've said, especially with the euro, to suggest that they will eventually break out, or at least continue with this upside over time. We're looking at this on a weekly, by the way. And so if we think about where we could manage to move up to, it's the target that we've had on on a horizontal basis, but we can see it in this channel formation of roughly between 113, 114 kind of area over the coming weeks or so. That would be an area to think about getting excited when it comes to basically everything. So this would be our next opportunity to consider longs and just any spot positions anyway, is to counter trade this supposed resistance on this ascending channel that we've got here, this rising channel, and think about what the effects would be across all markets. And so you match that with gold and oil and even crypto and Bitcoin and stocks and everything, and you might start to see a rejection over the next few weeks as we approach and get to this channel. And then I don't know where we go. Probably more appropriate to put indicators on at this stage. There'll be many moving averages that are creeping up with us the entire time. So let's just say the 10 exponential continues to rise like this, and maybe all we get is a rejection to a support, which is more or less where we are right now. Maybe we break down to a larger extent and get supported on any number of these other moving averages, which are all going to be pretty steep as well, I have to say. There's no reason to be bearish on the dollar, but there is reason to expect a rejection from this level, and that is basically that is it in a nutshell. So we've got oil wanting to go up, we've got gold wanting to go up, we've got Bitcoin looking to form a low, we've got stocks desperate to form a low, and the common denominator is the rising strength continuation of this uptrend on the Dixie. We can see in the past that we've had reactions, savage moves up and savage moves back down from this trend line. And again, this is a weekly. So a big move up in 2008, and then back down again to the bottom of the channel. Nice big fat move up in 2014 to the top, all the way to the top over here, January 2017, all the way back down again into 18. And so there is rhythm to it. And if we do think about this in terms of a formation, it matches, but we're yet to see it. And like I say, we can't get particularly excited until something definitely happens. Let's face it, we've had bearish divergence the entire way up. It means nothing. It means nothing. So the momentum on this is basically trumped by the guys who sit around the table who make the decisions about monetary policy and the central banks, not just in the Fed, but Europe and UK as well, you know, they have an effect on this. If they decide that their currency is going to be weaker because they can't match the rate hikes of America, then it is by default their weakness of currency reflects on the strength of the dollar through the Dixie. So it's not just the Fed, but the Fed are partly in charge of this, mostly I would say, but so is the ECB and the Bank of England and all the other central banks that comprise of the currencies that reflect it within the Dixie. And nobody can match the dollar, or nobody can match the power of the Fed, because America is by far the most powerful, strongest country in the world, and they can afford to do this to themselves to combat inflation, whereas other countries aren't quite in such a luxurious position to be able to do that to themselves, you know. It's like they're going on the Atkins diet. That's what America's doing, whereas, you know, Europe is walking on a treadmill, and the UK is lifting some very small dumbbells, and that's basically how they're trying to deal with it. Whereas, you know, America are going full bore diet, exercise the lot. They're going to sort inflation out before anybody else, and while they're doing that, we will see the strength of the dollar. But if we do have anything to take away, is that at least there has been some rhythm to this rising channel, and the best we can ask for would be a rejection around 113 to 114, which should then start to reflect on things like gold and everything, oil, the lot, and stocks, crypto, everything will have a reaction, and then we'll see how the Fed decide to move forward. Are they going to pivot? And only when they do pivot should we expect a pullback on this to a greater extent. Anyway, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.